So Jackie, you sat down and said you spent the last several months trying to tackle this market. What's been so unique about the last 6 months in particular?
Well, technology in particular has been exceedingly active, and I know we've been waiting for this to come back. The last couple quarters have actually been exciting. We are definitely seeing technology companies themselves and tech-enabled businesses in general just really, really eager to get out. And I think a lot of this is driven by the fact that we've been in such a strong economic market now for a number of years. Everybody wants to make sure they access this window.
So will it continue, though? What is the rest of the year?
Yeah, I think Q4 and especially Q1 are going to be very, very busy markets for us.
I'm curious, though, this bull market has been going on for so long. Those conditions haven't really changed outside of that little hiccup in 2015. Why now? Why are these companies deciding now is the time, when I think back to last year, the year before, when everyone was saying it's going to be next year, it's going to be next year? What is actually different?
Well, valuations were high at the beginning of the year, and then we took this dip, and they're now almost back up that level again. I think folks are saying, what's the chance this is going to happen again? These markets are great. I'm hearing it from a lot of companies. They're watching their competitors, and they're saying now's the time to move.
Are we talking recession concerns here? Is it a broader valuation issue?
I think there's a little of everything. I think people have just said this economy has been so strong for so long. Can this hold on? And we're talking about maybe having, hitting the longest run in history. So I think there's a feeling of, will the market be this good a year from now? I'm not sure. Let's go now if we can.
And yet you say 2019 is the year of the unicorn. What do you mean by that?
We have been talking like, when are the unicorns coming? When are the unicorns coming? I actually think they're coming in 2019. Now, it may not be
Uber and Airbnb?
I think that we're going to see a lot of unicorns. We'll see who's ready to go. But I will tell you, we work with a lot of those companies, and they're really preparing themselves today to get ready.
I want to talk a little bit about the dynamics in the private market and how that is affecting the pipeline here. Alex, you brought up an interview we did with venture capitalist Bill Gurley back in February at the Goldman Sachs Tech Conference, where he talked about how venture capitalists have given, because of the competitiveness, they've hesitated to put pressure on companies to go public at all. Take a listen to what he had to say.
Hyper competition has made it so that the majority of VC's biggest fear is missing out on the next investment. And so they're afraid to have a reputation as someone who asks too many questions or push too hard. And I think it's led to a situation where there's not a lot of stewardship for discipline and results and that kind of thing.
Are we in that same state right now?
It seems a little bit like folks are coming to a reality check. I don't know if that's because the venture capitalists have made out so well on a lot of these IPOs, but you have people coming to the realization that that comfortable space being private without those folks on your board who probably aren't pushing you to get public, or it's not the same scrutiny as public markets, that dynamic is changing. Drew Houston, the CEO of Dropbox, was in last week at our Players Tech Conference, and he told me he's really happy he went out. He's okay with the scrutiny. So that's a very different message than kind of the Silicon Valley groupthink was 3 or 4 years ago.
Well, and at Uber, of course, we have a changing of the guard, and who knows if 2019 would have been the year if Travis Kalanick was still in charge. But Dara Khosrowshahi has come in and said, no, we're going to do this by 2019, we think. What is the role, Jackie, that you see venture capitalists actually playing here in encouraging or discouraging or hands-off approach?
Yeah, I think investors play a significant role in this, and many of them are encouraging their companies to look at if they are ready to go public now, especially those where they've been in the deals for 7, 10 years. Many of these unicorn companies, it's starting to reach that range. And so they're challenging management to be ready. We do a number of things such as like IPO readiness assessments, where we go throughout the company and we say, are you ready to operate like a public company? That sort of functional readiness combined with, do you have a strong growth story, which obviously management owns that, especially leadership. Can you execute on a strong growth story and operate a predictable business? If those things are in alignment, yes, you're ready to go.
Now, we have to talk about the Tesla part of the story, and Elon Musk going on and on about how hard it is to be a public company CEO trying to take Tesla private. Alex, I know you've been on the phone nonstop. Most of the analyst investors we've had on the show have given this zero chance of happening. Zero, literally. Is that what you're hearing?
We still don't have a plan yet from Musk. To have a take private, you actually have to have a plan, something that goes to the board to be considered. So right now, it doesn't seem like there's an actual offer specific on the table. Again, that could very well change. But the thing has been so interesting because he's touting these ideas that the private companies who have maybe struggled to get out the door have been touting. Growth at all costs, no thought of the bottom line, which investors have become more sensitive about profitability, and Musk has gotten an earful about that as well.
Is Tesla, Jackie, an anomaly here, or do you see this issue and situation having a broader impact? I mean, we've seen a tech pullback over the last few days, for sure.
I think, companies in general that are looking to access the public markets, they're at a certain point of maturity, at least where their business is today, that they ought to be able to run a predictable business. They have growth stories that they can communicate to the market. They can execute on those. Companies that are going through changes and dynamics, sometimes they do take a pullback on that, and that's not a bad thing. We have been really happy. I know a lot of people have said, those unicorns, why is it taking so long for them to get out? The reason it's taking so long is they're trying to figure out how to operate like a public company before they go public, taking risks before they're in the public market.
And I want to flag an interesting metric of the tech IPOs this year. The average IPO size is $350 million. There's a lot of hemming and hawing about there not being any IPOs, but if you think back to 1999, it was an average IPO size of $105 million. The read-through in that is the maturity level of these companies is different than it was a couple decades ago when we had the last tech IPO boom versus kind of where these companies stand when they go out right now.
At the same time, Slack just raised $400 million at a $7.5 billion valuation. I recently sat down with the CEO of Slack for Studio 1.0 in an upcoming episode, and Stuart Butterfield said, he's in no rush to go public. I think he believes that's the most likely outcome, but will we see more of that too?
I think the private markets are really robust. We're really fortunate in the United States, especially, how robust our private and public markets are. We attract more companies from around the world to list on U.S. exchanges than any other exchanges around the world. We have robust private equity, venture capital, large corporates who created venture arms, and the list goes on, and just individuals who are willing to make investments. So we are very, very fortunate. I think we're going to continue to see funds pumped in to private and public markets this year.